Tesla just released its first quarter earnings for 2026, and it was a bit of a mixed quarter. On one hand, growing revenue, rising profits, and solid cash flow. But on the other, slowing demand, rising costs, and a massive bet on AI that's making investors nervous. In this video, I'm breaking down Tesla's most recent quarter, take a look at the charts, discuss the 3 biggest risks to the business, and I'll give a 1-year price target for the stock. Let's generate alpha. Let's start with the headline figures. Tesla reported $22.4 billion in revenue, which is up about 16% year over year. This was in line with Wall Street expectations. Earnings per share came in at 41 cents, up 52% year over year, beating expectations of 37 cents. Tesla generated $1.4 billion in free cash flow, which is a major turnaround compared to expectations. So overall, on paper, this was a solid earnings beat. So what actually drove this growth? Vehicle sales are still the core business. Tesla delivered around 358,000 vehicles this quarter, up roughly 6% year over year. A growing portion of revenue is now coming from software and services, especially full self-driving subscriptions, which have reached over 1.28 million users. That's important because software has higher margins. Tesla is slowly transitioning from just a car company into a software and AI company. But here's the real story. Tesla is going all in on AI, robotics, and autonomy. We're talking robotaxi rolling out in multiple cities, the Optimus humanoid robot, and massive investment in AI chips and infrastructure. Tesla plans to spend over $25 billion in 2026 on capital expenditures. That's huge. This is no longer just an EV company, it's becoming a high-risk, high-reward AI bet. Let's take a look at the charts and start with the moving averages. This is where trends become very clear. The 50-day moving average represents the short to medium-term trend. The 200-day moving average represents the long-term trend. Tesla is trading around $376, which puts it below the 50-day moving average. This usually tells us momentum has weakened in the short term. The 50-day moving average is one of the most important levels traders watch. For Tesla, being below this level means buyers are not fully in control right now. Tesla is also trading below its 200-day moving average. This is more concerning because the 200-day moving average is often seen as the line between a bullish and bearish long-term trend. So right now, Tesla's chart is not showing a strong technical setup. It needs to recover both the 50-day and 200-day moving averages before the chart starts looking bullish again. Tesla's RSI is sitting around 49, which is neutral. That means the stock is not extremely oversold, but it's also not showing strong bullish momentum. So overall, Tesla's chart currently looks cautious. Here are 3 of the biggest risks that could meaningfully impact Tesla shares going forward. Slowing growth and rising competition. Tesla built its reputation on rapid growth, but that growth is starting to slow. The electric vehicle market is no longer Tesla versus nobody. Now you've got serious competition from companies like BYD, traditional automakers, and even startups entering the space aggressively. Margins are also under pressure. Tesla has been cutting prices globally just to maintain demand, and that's a red flag. When you lower prices to sell more cars, you're sacrificing profitability. Valuation is still extremely high. Tesla still trades at a much higher valuation than most automakers. Investors aren't just buying cars, they're pricing in AI, robotics, autonomy, and future innovation. But that creates a risk. Because if Tesla fails to deliver on things like full self-driving or robotaxi, the stock could go significantly lower. The Elon Musk factor. Tesla's future depends heavily on execution, and a lot of that ties back to Elon Musk. On one hand, he's a visionary. On the other, he's unpredictable. Whether it's distractions from other ventures, controversial decisions, or delays in key projects, execution risk is real. And with so many ambitious goals like AI, humanoid robots, and autonomous driving, Tesla has a lot to prove. Now, the big question: where could the stock go from here? Most analysts maintain a buy rating with an average price target of about $405. As for my opinion, I am giving Tesla a buy rating with a 1-year price target of $450. Here are 3 reasons why I believe it's a buy. Tesla is more than just a car company. Most people still think Tesla is just an EV company, but that's a massive understatement. Tesla is building an entire ecosystem: energy storage, AI and autonomy, robotics, and software. If Tesla successfully scales things like full self-driving or robotaxi, the business model shifts from selling cars to generating high-margin recurring revenue. Massive long-term EV growth. We're still in the early innings of EV adoption globally. Governments are pushing for electric cars, infrastructure is improving, and consumer demand is rising every year. Tesla is still one of the most dominant players in the space. With scale, brand power, and manufacturing efficiency, Tesla is positioned to capture a huge share of that growth. Even if competition increases, the overall market is expanding so fast that Tesla can still win big. Innovation driven by Elon Musk. Love him or hate him, he is one of the most ambitious innovators of our time. Tesla isn't just improving existing products, it's pushing boundaries. Few companies are taking bets this big, and if even 1 or 2 of these initiatives hit, it could unlock massive upside for Tesla shareholders. So when you bring it all together, Tesla is at a crossroads. The chart is showing short-term weakness. The valuation is still pricing in massive future growth, and the market is waiting for proof that the next phase of the story actually delivers. Whether you see Tesla as overvalued or a generational opportunity really comes down to one thing. Do you believe in what this company becomes over the next 5 to 10 years? Thanks for watching. If you enjoyed this video and want more earnings recaps with 1-year price targets, please like and subscribe. Until next time, keep earning, keep saving, and keep investing. I own Tesla shares through an S&P 500 index fund. This is not financial advice, just my personal opinions. Make sure you consider your own risk tolerance, time horizon, and financial situation before making any investment decisions.